Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about runaway markets. Now, runaway markets are markets like you see on the screen. They're ones that just go straight up, right? There's barely any pullback, there's barely anything going on, it's just pointed straight to the sky, and it doesn't really come back. But the big thing that we want to keep our eye on is what type of environment this is, because it doesn't happen very often. So in terms of going over it or covering it, unfortunately, there's not many times that we can really talk about it except going backward. So looking at today's movement, we have a very strong bull market. Now, we talked about this on the YouTube video a couple days ago, going over the outlook for the S&P, so this shouldn't come as much of a surprise in terms of what we're seeing here, but this overall lift is very aggressively bullish. The market internals opened up way bearish. Nothing was showing upside momentum until close to 11 o'clock. So, I mean, obviously it started lifting a little bit before that 11 o'clock mark. So how do we classify these runaway markets? Generally speaking, the best runaway markets are going to have a very strong start to the day. Now, if we look at that first candle of the day, we can see that it is very strong. That is a big bull bar, not in terms of size, but in terms of strength. It closed on its highs. The wick was on the bottom. There was no wick on the top. That's showing you that there is a lot of bullish momentum. One candle right out of the gates at 9:30, that's not enough to really convince anybody, so we need a little bit more information. Bar 2 comes into play, even stronger. We're closing way above the previous candle's high. Everything is showing that the market is starting to potentially lift. The gap fill, that obviously wasn't the objective, or the market would have stopped. So we have a little bit of strength coming into the markets, but I usually like classifying them after at least 3 candles so we can kind of add to that confidence. We close the third bar. Could have been better. What I would really like to have seen is that closing above the second candle's high as well, really kind of stacking up that strength. In this case, though, we didn't really get that, but we did maintain bullishness. It closed bullish. It was a little bit wicky on the highs, but overall it's bullish, right? We're seeing signs that the buyers are still here. And then it goes into bar 4, bullish, 5, bullish, 6, a little bit gross inside bar 6, likely sellers coming in at the previous major swing right there, trying to shove the market back down. But then it followed up bar 7, bullish again, and then 8, bullish again, closing above that high. When bar 9 came in, this was the first bear bar that we've had all day. It started off bullish and just pinned to the ceiling, never came back. So what do we know? Well, we know that this is a very strong bull trend, and if buyers haven't gotten in yet, they're probably going to be buying on this pullback. Now, with runaway markets, there's a few different places that buyers will start coming in. They'll buy that close of the first bear bar and just say, you know what? I know it's a really wide risk. My stop is going to be below the lows, but I might be able to get a one-to-one move off of that. And you'll notice that's actually where this top came in. But those traders, along with other traders, are looking to pretty much buy for any reason. We have a massively bullish market. Everything is pointing up. Buy everything, right? So we get a second candle pullback, and this is one of our favorites because we get a 2-candle pullback that trapped bar 8's low and then turned right back around on bar 11 with a very strong bull bar back up. Now, it's not a huge bar, but strong in the sense that the bar 8 low, the last bull candle, was defended. That shows a lot. And when it turns back around on bar 11, buyers come back in and shove the market back up through the top. Now, this move was by no means easy, right? Bar 12, 13, that was nice. But 14, 15, 16, now we're showing some traps on the highs. We're having a little bit of difficulty going, but the sellers aren't showing up to the party. And that goes to show you that buyers are still buying this move and pushing the market higher. It was at that point where the internals, the market internals, the volume and the tick and the advancers, decliners, those started kind of wrapping back around and ramping up with the markets, where they were actually starting to turn positive and show that the buying pressure was actually there. And then we run into the previous high of day. What perfect timing for the internals to come in. Now, like I was saying, we know that this kind of move is going to have sellers that get stuck on the wrong side of things. Now, in the long run, over the next couple weeks, they might be right? Very often we see these big runs where you have, Monday or Tuesday, whatever, very strong. The next day's kind of sideways, maybe slightly up, goes into Wednesday, continues it up, and then later on in the week or next week, it dumps all the way back down. That might be a great way to position build if you're a long-term trader, but short-term traders are scalp long only. That's the only viable option that we have going on today, unless you really want to risk it, taking those trades above some of those major swings, which, by the way, did work. We notice here and here. Both of those times did work out. So even the aggressive counter-trend traders still had a chance to make some cash on it. But the overall momentum is up. And when we start showing this pausing, this movement to the upside, big burst in volume, this is a big leg, right? This is pretty late in the trend after, you know, bar 1, 2, 3, 4, 5, all the way up. Then we get to 16 where the sellers aren't showing up. 17 blows off the high. 18 follows through. 19 confirms. We've got strength. We've still got strength. And the buyers aren't even allowing it to pull back. I mean, we barely even made a flag before it broke back out again. So very frequently what we have in these types of situations are the sellers are trapped. And what they're going to do is you're going to get generally one good pullback on the day that allows those sellers to liquidate the position and potentially even reverse and go long. Now, in this case, we know that sellers probably came in underneath bar 9, although it wasn't a good signal. They probably still came in. We also have more sellers below bar 20 and more sellers below bar 30. But at this point, by the time we have this plotted on here, we have a 3-push wedge top coming into play. We're above the previous high of day, and we still have perpetual motion to the upside. A lot of sellers are going to start getting nervous. So if we know where their entries are, which is usually one tick below the candle, we have an entry at 28.37 1/4, and I'm going to make these really big just so we don't lose sight of them. So we've got an entry point there at 37 1/4. If we take the next entry point that we were talking about, which is right there at 28.46, then we have the next entry right there at 53, right? The low was 53 1/4. Yep. The low on this one was 46 1/2. Oop, one more tick. There we go. Those are the 3 entries. Now, if we take our handy-dandy calculator tool here, we can average those together and look at it and say, okay, 28.37 1/4 plus 28.46 1/4 plus 28.53 divided by 3 is 28.45 1/2. So that's really the objective that sellers have. That's their break-even point, 28.45 1/4. Now, you'll notice we made a low of 46 1/4 and turned right back around. Now, what are some things that we can expect out of this kind of movement? Well, there are a lot of different types of ways to scale in. There may be sellers who are still building into positions and are totally happy holding on for the next couple days, like a swing trade like we were talking about. But we have to, again, realize that we know that sellers are potentially trapped and they're looking for an escape route, right? Get me out. And if we know when we come into this point and we're up here, pretty obvious that it's pretty darn bullish. In the next pullback, if we do get a pullback, maybe a trap swing low or, heck, anything, more than just sideways action, an actual pullback. That first actual pullback is likely going to be the only chance sellers get to get out at break even in today's price action. They might have to wait again if they're still stuck. They might have to wait 2, 3, 4 days before they're able to get back out again later. So what does that mean? That means that sellers are likely going to be aggressive. And they're going to come in pretty heavy, but they're going to do it in areas that make sense, right? A 3-push wedge top, a trap high, something that gives them some benefit of the doubt that, yes, I can put on a lot more risk here because there's a good chance that we're going to get that heavy pullback. And that's called a 3-to-1 build-in, right? So traders who are building in short, they've got a short at 37 1/4, they've got a short at 46 1/4. All right, well, they have 2 lots. That might be 20 contracts, it might be 200, whatever it is. But that's where they're going to look at this and say, okay, this is way too bullish. If I'm going to get out of this thing and I have any chance of reversing, I'm going to have to go in 3-to-1, maybe even more if I'm wrong. And what does that mean? For every 2 contracts, they're going in with 6, right? That's 3-to-1. For every 1 contract, they add 3. So if we take that math into account, now we have 28.53 times 3 plus 20, 2, so it'd be 6. 28.53 times 6 plus 28.46 1/4 plus 28.37 1/4, and that's divided by 8. We had 2 initial, and then we added 6. So divided by 8 is 28.50 points. We'll round down because they're short, so 28.50 even. So 28.50 even. That's going to be the hot spot that we want to keep our eyes on. So if we look at 28.50 even, that's actually really far up there. That's nice. 28.50. Now, this is the beautiful thing about the way that this worked out because it lines up with previous swing highs. It lines up with a retest of the flag top, previous major swing. There's a lot of things that are lining up in the same area. And a lot of traders, what they're going to do is they're going to try to get money underneath this. They're not going for break even per se, because remember, if they're building into positions, they're probably floating a good chunk of money. They can't just slam down 1,000 contracts. They have to feather their way out of it to make it not so obvious. So they're going to kind of piece their way out. Anything below 28.50 is a potential buy back to get out of their shorts. Take the losses on the first couple positions, but start making money on the third one that compensates for that loss so they can try to get out of break even or better. and the market kind of stalls out, comes back down, and notice that it's starting to stall out as it gets closer to that 28.50. That's because those buyers are beginning to come in, right? Now I'm talking sellers that are in as buyers, right? Sellers exiting positions as buyers, and it slams through. So if you were in a short position and you just went 3-to-1 and you see that kind of candle, you're probably going to start liquidating, right? Tapping that mouse button and getting out of some of those contracts, which means that we might start getting a little bit choppy sloppy. And hey, what do you know? Hey, presto, we have a bull candle right after that. That's because all of those sellers are now starting to liquidate. They're getting out of their positions. They might not be fully reversed yet, but they're scaling out of those shorts. We go back down, notice all of the wick again. There's a reason for that big wick because those sellers are, once again, getting out and trying to reverse as quickly as they can. And then it starts going back up again. Now they're thinking, okay, crap, as this gets closer to my break-even point at 28.50, I've got to start hitting them faster. And if it goes above it, I've got to start liquidating because I need to be long in this kind of market, not short. So when they're trying to reverse in here and it starts kind of backing its way back up into their entry at their break-even point, if they're still short, they're going to start hitting the gas pedal a little bit harder. They're trying to keep it down, but they're buying into all of those dips. You notice all the wicks on the bottom more so than the top? More wick on the bottom more so than the top? Stalling, right? Notice where it's stalling. They're trying as hard as they can to not come out too aggressively, but still keep it underneath that break-even point. And then that happens. So if you're a buyer, you're a seller rather, and you just went in 3-to-1 to start exiting out, you've been scaling out, trying to reverse back long, and you see this, now you're thinking, crap, maybe did I miss my chance to reverse? We were probably able to liquidate a good chunk of the position. It was down there for a good half hour. But if they weren't able to go long, maybe they just liquidated all their shorts, but now they want to go long. Now they're going to have to wait for it to come back again. It starts running away a little bit and starts backing up. Now, just like we saw at the bottom, we know that sellers are predominantly out of the way. The big chunk of sellers that have been holding the market down off of those highs, they've been trying to hold it underneath that 28.50. They're liquidating, getting out, trying to go long, trying to build long, building long. You're causing all of this buying pressure on that dip down. And now that it broke out aggressively on bar 43 back above that break-even point, if they're still short, they need to essentially get out of everything, right? The profit that they made down here, maybe they have to nullify it with this and just take it as a break-even, even a small loss. And then it starts rallying back away. So all of those sellers are now reversed into buyers. And what's their objective? Well, their objective is going back to the highs, potentially further. This is a runaway market. You might end up seeing this go one full leg up, a pullback, and a second leg up, and that could be really far away. So buyers are trying to position, and if it comes back to that 28.50 area, every time it gets close, they're going to start pinging it back up again, right? And then it starts running away, and it finally, one more dip before that trap, and then breaks through the highs. So this is a phenomenal example of that one pullback that they have a shot at. And if the market is strong enough, you have to start putting yourself in the mindset of those traders. What would you do if you were in that case? Even if you can't trade that way, even if you don't have the account size to trade hundreds of contracts, that doesn't matter. Knowing what those traders are doing is a huge step in understanding why the market is doing what it's doing. And that right there, bar 36 to bar 43, is a perfect example of those sellers getting out at break even, liquidating the shorts, and turning into longs all in one, right? Dump the orders, buy the orders, right? Start flipping position and go long so that they can ride that second leg to the upside and try to make back potentially some of the losses that they took inside here, or if they didn't get all out there or whatever. Beautiful example of those runaway markets. But on the flip side, if you're not short and you know that this is occurring, what better place to go long than when you see this? You know that that is a full invalidation of the seller's bias to try to keep the market underneath that break-even point, and now it's popping higher. That next pullback is probably going to be pretty darn interesting, and that was right there, bar 47. Almost picture perfect. It backed up one more time, but it still didn't make a new low, and then rallied all the way back up another 10 points. So a phenomenal example of those runaway markets, and understanding that the stuck traders, the sellers, you can still use that to your advantage. Like the video that we uploaded, I think on Monday or Tuesday on that trade that we had on the S&P, utilizing those traps to your advantage and understanding what the opposition is doing is a big, big part of understanding what the market is doing. And if that opposition are the people who are moving the markets, hundreds and hundreds and hundreds of thousands of contracts, might be a good idea to know what they're doing. And that's a perfect example of one. These are the types of things that you need to look for when you're trading price action to fully understand what's happening. So that's going to do it for this one. I hope you found it useful, entertaining, interesting, and maybe something you can kind of add to your tool belt to kind of keep an eye on the markets and what they're doing. That's going to do it for this one, though. I hope you had a fantastic trading day today. As always, underneath the video, click on the subscribe button so you don't miss any of our future videos. And of course, along with the subscribe button on the right side of that, click that little notification bell icon so you don't miss any of those videos. It'll notify you when they come out, so you make sure that you don't miss anything important. That's going to do it for this one. Enjoy the rest of the day, and we'll see you all in the next one. Thanks.